Good afternoon. Welcome to the channel Final Bell on the Rural Radio Network. I'm Alex Makovica, and Jim McCormick with agmarket.net is joining us for today's conversation to recap some factors influencing today's commodity trade. Well, Jim, we start off mixed across the boards for the grains here, and over on the livestock side of things, live cattle settling higher, feeders mostly higher, and lean hogs trucking lower again for a Tuesday. We'll dive into some of these factors, but let's just get your high-level thoughts, Jim, on today's trade. What'd you see?
A lot of it was a little bit more of consolidation. I mean, we've definitely seen this corn market break hard the last couple of days. Today, we saw a little bit of buying. We are back down near essentially the early, I call it late winter lows, early spring lows. So that's catching a little bit of buying, technical buying. Beans saw a little bit of weakness. Alex, there's been a lot of hope that we're going to get some announcements sooner than later about the renewable fuel standards. There's been hype about that the last couple of weeks, and I think every day we don't get that announcement, you're going to see a little bit of maybe length bleed out of the bean market that had bought it on anticipation that announcement was coming. I've heard some people say maybe by Memorial Day weekend. If that's so, we still got a couple more weeks before anything comes out.
All right, well, let's dive into, obviously, planting progress shaping today's trade pretty heavily. For Nebraska specifically, corn has officially passed the halfway mark for planting, emergence just shy of 10%. Beans, almost 35% planted, emergence at about 2%, winter wheat conditions. Still not looking any too great. But as you look at the bigger picture here, Jim, what is planting progress telling us here right now, and how is that impacting the grain trade?
Right now, if you look at corn, we're 40% done as of Monday compared to the 5-year average at 39%. We're a little bit behind in Iowa, a little bit behind in Illinois, but if you look at the forecast the next week to 10 days, it really warms up. You're going to get summertime feel here, at least in northern Illinois. I know they're talking temperatures in the 80s. So I would look for the eastern corn belt, or essentially the bulk of the corn belt, to catch up and actually accelerate. And I'd say within the next 2 weeks, we'll get a bulk of this crop planted. And that might have been some of the weakness we've seen the last couple of days in the market, because as the confidence came about that this crop's getting planted on time or even early, you've taken a little bit of weather premium out. Now the question is, will we put some more weather premium back in eventually? The longer range maps that continue to come out are showing us as we move into May, June, July, and even to August, the modeling saying on the analog years, anticipate a warmer, drier summer bias. So I still think a weather problem or a weather rally is probably still in the books.
When typically, if we do see another weather rally, would that happen, Jim?
Normally, you probably tend to see it a little bit more in the June time frame, type of situation. If you think of 2012, the market really didn't get excited to mid-June. If you look on a historical basis, when we put in the last 17 years, we put the high in the corn market in May 5 times. We put the high in June 7 times, and you put the high in July 5 times. So if you look at it historically, more of a June-July rally is more the odds of when you tend to put that weather premium in on the corn, especially as they take a look at what that pollination weather is going to be like.
Okay, Jim's crystal ball. We'll keep an eye here in the next couple months what happens. On the topic of trade deals, and you had mentioned this a couple of minutes ago, no new real developments have been happening, but as it was in Trump 1.0, some of these conversations took a long time, especially when you think about China. But what's new on the trade deal front that these ag commodities are focused on, Jim?
Well, what they're looking for right now is, there's been a lot of rhetoric saying, hey, we're close, we're very close, we're close to a deal. Canada was in, the Prime Minister of Canada was in the White House today. Nothing was really said except for keeping the USMCA for now, maybe some slight tweaks down the line. But what you pointed out is very true. I think this is the problem the market's got right now, is they want these deals, but the fact of the matter is, you mentioned China Trade 2.1 or 1.0, excuse me. That took 13 separate meetings over about a 2-year span before that deal was agreed upon. We're trying to do that not with just one country, with 180 separate countries. So this is going to take time, and then it's going to get interesting, because right now I would argue a lot of who's been watching these trade arguments has been Wall Street, maybe the producers because the agricultural market moving. The consumer as itself has not really felt it. We're starting to hear reports that ships coming into the West Coast from China are down 35-40%. One ship came in, Bloomberg said, I think the initial tariff cost was $470 million. Traditionally, that'll get passed on to the buyer of that ship and then on to the consumer of those goods. So the consumer's going to start feeling the heat of these tariffs, and that will probably, I believe, put even more pressure on the Trump administration to start getting these deals written down on paper.
Okay, I think about, obviously, the big players, China, Canada, and Mexico. Jim, as you see it, what are some other countries that are important to have trade deals with? What are the commodities that we're dealing with here?
Well, you hit the big three. There's no doubt about it, but India is definitely a big player right now. There's a lot of hope that India would come in and buy some goods. They tend to be self-sufficient in wheat, but when they have wheat production issues, they come into the world market. That's a market we could get. Veg oil is another big market that we're looking at for India. So they're a big buyer. The other ones, potentially, just because they're more reliable sources, are the Asian markets of Japan and South Korea. They tend to not buy near as much goods as some of the other countries do, simply because they're smaller. But they are consistent, so we need to watch them. And then Europe as a whole will definitely have an impact. Europe came out today and said that the EU actually cut a deal with India today, lowering their tariffs. So the European Union should cut a deal with the Indians. Now we'll see if the Trump administration can.
All right. Finally, Jim, for this first half, you said beans maybe gaining a little bit of support due to optimism regarding renewable fuels news. What are you seeing so far?
Haven't heard a whole lot. I mean, a lot of people are anticipating to increase the mandate quite a bit from where it's at, and that would be very good for the industry. The question is, if you increase the mandates, are you going to increase the subsidies as well? But like I said, the belief is the Trump administration is going that way. It's just waiting for that announcement. Technically, if you look at like the May beans, or even the July beans, they kind of went down to the 50-day moving average. They held it, so we're finding a little bit of technical support in the market, as well as that fundamental optimism of essentially a renewable deals coming soon.
All right, the first half of the Channel Final Bell brought to you by Channel Seed and your local Channel Seed Pro.
When challenging conditions arise, we don't back down. We up our game. Outpacing the competition with innovations fueled by Bayer's R&D, keeping you equipped with an expanded portfolio, elite genetics, and additional local test plots. Channel leads the field, so you can rise above. See how at channel.com/rise. Read and follow pesticide label directions, grain marketing, and other stewardship practices.
Half of the Channel Final Bell here on the Rural Radio Network. I'm Alex Makovica. Joining us today, Jim McCormick with AgMarket.net to break down factors influencing today's commodity trade in the first half, touching on the grains. Obviously, planting progress trucking right along, looking at the long-range weather forecast as well. Also in the news, for the grain side of things specifically, no formal trade deals yet, what that means for trade today, and beans holding a little bit better due to optimism with news regarding renewable fuels. In the second half, Jim, we are going to touch today on livestock with live and feeder cattle, for the most part, trading higher, lean hogs lower. Although cattle not quite as high as what they've traded here recently. Your thoughts as you look high level on today's livestock trade? What do you think?
Well, it was a relatively muted day compared to Monday come out of the weekend, and Monday come out of the weekend. Obviously, we were off to the races on that higher cash from last week, and that is the driving force right now. The supply is tight, and the packers are paying up for that cattle, and that keeps this trend intact. The real question now, Alex, is the June cattle going to be able to test that April contract high, where the Aprils went off, and if they would, it'd be a couple more dollars higher. Then it really comes down to, we've known the supply is very tight. Now it comes down to the consumer is, do you get to the point where that consumer gets essentially priced out of the market? There was a survey just a couple weeks ago that suggested 74% of Americans are living paycheck to paycheck. So as these tariffs come into effect, and President Trump said in a Time interview, a win in the tariff would be a 10 to 20% tariff on every product coming into the United States, which means if that's the case, and ends up that's the case, folks, you're talking a 10 to 20% tax, in essence, on everything coming in. And the real question is, those Americans, 3 out of 4 that are already stretched living paycheck to paycheck, can they afford that extra cost? And if they have to afford that extra cost because essentially there's no way around it, Are they going to essentially have to move away from the higher beef cuts and maybe move down to the pork or chicken, which in essence could support the pork industry and the chicken industry a little bit, but it might put a little bit of pressure on the beef industry.
If, perhaps maybe I should say, when that does come to fruition and consumers decide, okay, I'm not paying this much anymore, what are maybe some triggers to be looking for? And B, how much support do you think it could provide to that lean hog complex then?
Well, that kind of depends. Honestly, it's a hard question. It kind of depends on how quick everything changes. I mean, the fact of the matter is, if President Trump keeps this 145% tariff in on the Chinese goods, that is going to be a huge cost to the American consumer. I mean, you think about it, you're looking at, a computer that you might have bought from China that's produced in China, it's $1,500. It's going to cost you double that. It's going to cost you $3,000 plus if you take the full tariff. That's going to, so that's going to have an impact of where do these tariffs end up will have an impact on how much it hurts the consumer. So it's kind of the higher the tariffs, the higher the cost of living goes up, the more support you're going to have for the hog industry.
Well, cash cattle trade continues to just keep climbing higher, and I promise we're not re-airing things. It just does keep going up. Developments this week, obviously things developing on Wednesday last week. Do you think things go higher this week, Jim?
Right now, I think they should. It looks good. I mean, right now, like I said, we're not finding any more cattle this week than we had last week. It should be strong. Remember, they're going to be buying for this Memorial Day relatively quick, which is hard to believe, but we're already, into the first full week of May, so that's going to be a little bit supportive. Something we do need to watch, though, is tomorrow is we do have the Fed meeting, and we'll see what the Fed does on interest rates, and does that have an impact on the overall psychology of the marketplace? That could maybe derail the higher cash potentially if something really would shake the stock market per se or something like that. So that'll be the next little hurdle maybe the cattle industry's got to look at, not necessarily what the cash price is going to do, but what the Fed does on interest rates.
All right, a number of things coming out. We've got that report coming out, also WASDE reports coming out next week. As you think about the week ahead, maybe a month-long outlook, what are some things that producers, Jim, need to be keeping their eyes on?
Well, right now, I think you got to look to try to your break-evens right there. I mean, right now, let's be honest, the price of beans trading down here at the low 10s, and November beans is not exciting anybody. Corn trading here at 441 for new crop isn't exciting anybody. But if you look at where we're at, the weather models, like I mentioned in the first segment, are suggesting we have the odds are high that we will see a weather scare. Be prepared to pull the trigger right now. Now's the game plan now's the time, Alex, when you want to make your game plan to take advantage of something that may happen, because the reality is usually you're very busy out there, and when the market does rally, it's usually at the release opportune time-wise. So, now's the time to build that game plan.
All right, Jim, as we round out our conversation, best way for our producers to get a hold of you, what is it?
You can reach me directly at 815-665-0461. Reach any of the Ag Market team members at 844-424-6758.
All right, thanks so much. Jim McCormick with agmarket.net joining us for today's Channel Final Bell. Again, some factors influencing today's commodity trade: planting progress, trade deals when it comes to the U.S. and some other major partners. Beans holding together with some news regarding renewable fuels and what consumers are willing to pay for their grocery prices. That is today's Channel Final Bell, brought to you by Channel Seed and your local Channel Seed Pro here on the Rural Radio Network. And do remember, trading of futures and options does involve risk of loss and may not be suitable to all investors.